Tom Lee just called the Fed's bluff by outlining the four-step path that they always take, which if you understand it, puts you about 6 to 9 months ahead of everybody else out there. And I'll give you also 4, even 5 major beneficiary stocks here and why. So if you stick with me for the next couple of minutes, you might well have an amazing, extraordinary 2025. And if you don't want to wait till the end of the year to make money and you want your portfolio to literally look like that, where we are positioned in every sector that's actually booming right now, things like defense, oil, gold, and there's a reason for that, because we understand how the market actually works. And that sounds a bit cocky and arrogant, but it isn't. It's not because I'm so smart. It's just because I've learned from people who've worked in the biggest investment banks, who've ran the biggest hedge funds, who've managed billion-dollar portfolios. And they taught me 3 very, very simple rules that you too can learn. Anybody can learn if you just open your mind to that possibility, that your money can actually work for you and that you can make a lot more money from your money than actually from your job. It's a real thing. If you want to learn that, we're going to run a free 90-minute live educational session on Saturday at 10 a.m. New York time. Come and join me at felixprehn.org/grow, and we will help you to grow into the big, beautiful, wealthy state that you deserve to be in. Links down below in the description. There are 1,000 spots overall. I looked this morning, about 800 of you had already signed up, so don't hang about and do be on time. Now, the Fed's basically done nothing, right? They basically said, look, we're driven by mixed signals from inflation indicators, labor markets, and cautious growth forecasts, and therefore we're doing very little. But inflation data is in reality softer than previously expected, and if inflation remains low, and there is a lovely website called Trueflation, which shows you that inflation is at about 2%. Sorry, that's my cat. She's very excited about inflation. We're already set up for the later pivot towards bigly rate cuts, and I'll walk you through those 4 steps in just a second. Because Tom Lee believes that the Fed will have to cut pretty aggressively, and therefore stocks will rally very, very aggressively going into the year end. Why? Well, things like Bitcoin are trading pretty much at all-time highs. The market is just not expecting a lot of inflation. His S&P 500 target is a beautiful 6,600, which would be about a 10% upside. Now, the kind of stocks we're going to be looking at have a lot more than a 10% upside, so stick around. But Tom Lee's real parallel here is, and I think that's a smart one, Tom Lee draws a very smart parallel to 2019, so pre-COVID. And then the Fed was basically holding rates completely flat. And I consulted my chief charting officer around here, this little monster, and she said, yes, Tom Lee is actually right. The Fed initially, and I show it to you on the screen here, the Fed initially, the purple line is interest rates, did nothing for rates for quite a long time, and then they came down very, very, very sharpishly towards the second half of 2019, right? She got that one right, didn't she? And what happened to the stock market in the same time period? Well, measure it. From where the rates started to come down, we went up like 30-something percent, 37%, and that's just on the Nasdaq. So imagine what individual stocks did, the actual winners out there, they went up 50, 80, 100% in that same time period, driven purely by interest rates. So Tom Lee, in a quote here, he's saying, we believe the Fed will acknowledge that inflation is undershooting their expectations. And he says, recall, the Fed has argued that tariff uncertainty causes them to be on hold, but incoming inflation has actually been soft. And yeah, we've seen this movie before, precisely 2019, where they switched from raising rates, as you can see on the screen in purple here, to cutting them, and the market soared bigly. So we're seeing the same 4 steps planning out here, according to my chief charting officer. Was that your latest title? I think it was, yes. And she's saying that, look, step 1 is the pause. And we're there right now. We're basically at the very pause. So that was the pause, right? Market sort of does a reasonable thing, sort of sideways / upwards. And that's basically your signal that the pain is already over. And honestly, that removes the biggest fear that everybody has out there, which is the market's going to crash. No, it's not. And step number 2 is then, well, we're going to justify this. So you can look at the economic data. It starts to weaken a little bit. We're seeing that in the labor market, right? Pretty much every job created in the US over the last 4 or 5 years was created by for illegal immigrants. So if you decide to remove them, whether you like that or not doesn't really matter. You basically, well, you tighten that labor market pretty substantially. But still, we're seeing no inflation in the labor market, which is kind of weird. And what does that say to you? It actually says to you that the economy is slowing down, so the Fed gets its excuse. We got to move away from fighting inflation. We must protect the economy from slowing down, right? Must protect those jobs. And then we get step 3, which is the pivot. And there'll be lots of videos out there saying the Fed just pivoted. Well, we will definitely be guilty of one of those. And it'll basically, the Fed will change their language from the uncertainties, and they say we will need to sustain the expansion of the economy, protect jobs, and all that kind of thing. So when they're starting to talking about supporting growth, that's when you know rate cuts are coming. And then step number 4, they actually cut. Why do they actually cut? Well, they want to make borrowing costs cheaper for companies and consumers. They want to also make it, well, they want to make bonds less appealing. And if you make bonds less appealing, you know what you do? You push trillions of kittens into the stock market who now all want to buy growth-oriented tech stocks. And yes, this affects your favorite tech stocks giants, because the golden rule for tech, lower interest rates, make the promise of huge future profits more valuable today. So a 1% rate cut should give you about a 10% bounce in your favorite early stage tech stock. I'm going to put the racket away now. So let's look at Tesla, Nvidia, AMD, Palantir, and SoFi in that order. And of course, there'll be timestamps down below. And Tesla, well, for Tesla, it's actually a double win. Why is it a double win? Because there's 2 things that lower rates does. So we get lower rates. For Tesla, it does 2 things. One, it means cheaper car loans, which is how Americans purchase cars, generally speaking, with loans. And then secondly, as a company that's valued very heavily on their long-term vision, think robotics, AI, energy, all that stuff, their valuation is extremely sensitive to interest rate changes. It's basically like a startup. So a Fed that cuts rates, well, it just means hugely higher valuation multiple, right? That's Tesla. So we expect big, beautiful things for Tesla on the back of a softer Fed. We look at Nvidia. Well, if you've been watching me for a while, we've been bullish on semiconductors now, I think, for 2 or 3 weeks, and turned bullish on Nvidia, I don't know when, I can't remember, sometime in May. But a healthy economic outlook, supported by the Fed, means that the A boom is continuing, and it's their main driver, right? So companies like Nvidia and AMD are not immune to the broader economy, and we want their customers, their corporate customers, to feel confident and have access to what? To cheap capital. Right? So we want cheap money, because cheap money means more investments, and therefore they're going to buy more chips, which will also continue to ensure these premium stock prices that we're seeing for stocks like Nvidia and AMD. And Nvidia right here looks pretty good. We've taken out the recent highs, even the February highs. We're now going to battle a little bit here with the sort of November, December, January highs, but I just see this as continuing to be bullish. The sector is bullish. Everything is bullish. Could do with a little bit more volume. I think the whole Iran situation probably has a little bit of a pause on this one here, but overall that looks looking very, very good. And AMD also continues to do pretty well. And yes, potentially has a longer run rate. I mean, there is, in the short term at least, it is more likely, if it does continue to break out, that it can go significantly higher than AMD, which is more likely to go, it's more likely to do a little bit of that, right? So it's just because AMD got hit so very, very, very hard. So opportunity is definitely there. There are others as well. There is ARM, there is SMCI, there's a bunch of other stocks. I put out a video on that the other day if you want to find it on the channel. And then next, Palantir. Well, Palantir basically sells big, expensive, long-term software contracts rather. And when the economic outlook is stable and the Fed is supportive, their customers, both large corporations and government, they're far more likely to approve these multi-million-dollar budgets needed to buy Palantir's platform. So again, very, very good for Palantir. And again, will also help to, I was going to say, lift their valuation multiples, but that might be a little unlikely because their valuation multiples are already pretty sky high. But the market does not really care about valuation in the short term. The market just cares about momentum. The market cares about story. And at the moment, momentum still looks very, very good for Palantir. We're then looking at SoFi. SoFi is actually the most direct beneficiary of lower interest rates. And I'll tell you why. Think this through for a second. Say you have a student loan, right? And I don't know what you're paying for it. Say you're paying 4% for it. And now rates come down by, say, -1%. Well, what if SoFi were to call you and say, we can do your student loan, but we can do it for like 3.2%, right? They want to keep a bit of money. Are you going to do that, or are you not going to do that? Well, you're going to do that, right? So the demand for their core product, student loan refinancing, personal loans, mortgages, all of that, it actually explodes. A healthy economy supported by the Fed means fewer people will also default on their loans, which again makes their business safer, more profitable. And generally speaking, FinTech stocks move in the opposite direction of interest rates. So lower interest rates, higher FinTech, higher interest rates, lower FinTech, which is why SoFi, one of the reasons SoFi has been suffering so much while rates have been relatively high. So there you have it, folks. You want to actually learn how we pick these stocks, and there are so very many of them that have done so incredibly well and continue to do incredibly well, not because we're a genius, just because we follow the same system here, like this one here, bought on 6th of May. Now, at the moment, that's up 260% or so, and I know some of you guys are still in that. Let me know in the comments if you are one of those. I actually sold out here because I'm pretty risk averse. I had a relatively tight stop loss on that, maybe a little too tight in hindsight, but that's okay because I don't complain when I make 83%. Right? So we find these champions, these winners, and we find them every week. And it's not that you need us to find them. It's just, I think you probably need somebody to learn the rules from so you can find them yourself. And then for the rest of your life, you can find these big, beautiful setups and you can potentially make a lot more money than you're making right now. And you will definitely not have those big, horrible losses that so many have harboring in their portfolios. I can definitely guarantee to solve that for you on Saturday, but I'll also teach you how do you find these. So come and join me. FelixPrehn.org/grow. Come and grow your money with us. FelixPrehn.org/grow. Link is down below in the description. All the best. 2 bigwig congressmen, 4 stocks sold, all in one sector, and just before a big bill gets passed. All of this was, of course, researched and discovered by my quant, this one here, Rose, who's a rather, sort of strange-looking little kitten, really, very sweet.